All right, today we're putting on our detective hats and diving deep into the electric vehicle maker, NIO. We've got a detailed technical report in front of us, and we're going to break down the charts, decode the signals, and really try to understand what's going on with this stock. So let's get right into it. And this slide, well, it gets right to the heart of the mystery, doesn't it? NIO has been on an absolutely incredible run. But after a gain that big, pretty much everyone is asking the same exact question. What happens now? Is there more fuel in the tank for this rally, or is a pullback waiting just around the corner? Just let that number sink in for a second. 61% in just 3 months. A surge like that doesn't just happen in a vacuum, you know? It creates these huge expectations and, frankly, a lot of uncertainty. This is the backdrop for our entire investigation today. So here's our game plan for today. We're going to start with the big question. Then we'll zoom out to look at the bigger trend. From there, we'll get into the fun stuff, decoding the technical signals. Then we'll identify the key price battleground, and finally, sketch out 2 possible futures before we land on the final takeaway. Okay, let's officially kick things off. The big question we're trying to answer is simple. After that explosive run-up, what comes next for NIO? It's time to start gathering the evidence. First things first in any investigation, right? You have to understand the context. So let's zoom out and take a look at the scene of the crime, the recent price action that brought us here in the first place. You know, this timeline tells a pretty dramatic story. In mid-July, the stock was just kind of hanging out above $4. By early October, it had nearly doubled, hitting a peak of over $8. But since then, we've seen a pullback to $6.71. So what this shows us is a really powerful uptrend that's now hitting some serious headwinds. Okay, so with the big picture established, it's time to get a little forensic. Let's pull out the magnifying glass and start looking at the technical clues to see what they can tell us about the stock's underlying health. Our first tool is the moving average. Now, the simplest way to think about this is like a compass for the stock. It just smooths out all that daily price noise, which helps us see the actual underlying trend, whether looking at a few days, a few weeks, or even a few months. And here's where things start to get really interesting. This table shows a pretty clear conflict. See, in the short and medium term, the averages are actually above the current price, which signals some bearish momentum. But the long-term average is still way below the price, and that means the bigger, bullish trend is still intact. It's a classic tug-of-war. So, what this tells us is that the clues are not all pointing in one clear direction. We're getting conflicting signals, which means our detective work here is absolutely crucial. This is definitely not an open and shut case. Let's dig a little deeper with 2 more key indicators. So on one hand, you have the MACD. Think of it as a momentum gauge. And it's telling us that the powerful upward push is, well, it's losing steam. But on the other hand, you have the ADX, which measures the strength of the trend itself. And that's still showing a moderately strong reading. So momentum might be fading, but the trend hasn't collapsed. Not yet, anyway. And to add one more piece to this puzzle, we've got the Relative Strength Index, or RSI. This basically tells us if a stock is overbought from too much buying or oversold from too much selling. Right now, NIO's RSI is sitting at 46.10, which is smack dab in the middle. It's neutral territory. It's not too hot, not too cold. It's basically just waiting for a push in one direction or the other. Okay, this brings us to what might be the most crucial part of our analysis: the price battleground. These are these specific levels on the chart where the real fight between the buyers and the sellers is happening right now, as we speak. And the 2 big concepts here are support and resistance. Honestly, just think of it like this. Support is the price floor. It's a level where buyers tend to step in and stop the stock from falling any further. And resistance, that's the ceiling. It's a level where sellers usually show up and take profits, stopping the price from going higher. Simple as that. For NIO, these battle lines are drawn very, very clearly. We have an immediate floor, that support level between 654 and 659. The ceiling, our resistance, is up there between 704 and 709. And with the stock currently at 671, it's sitting just above that critical floor. So, we have the clues, and we've identified the battleground. Now we can lay out 2 very distinct possibilities for what happens next. Based on all the evidence we've gathered, let's look at the 2 primary suspects for NIO's next move. So here are the 2 paths forward. In the bullish scenario, if the buyers can defend that 654 floor, the stock could rally to test the ceiling up around 709. If it breaks through that, well, That could open the door to 777. But the bearish scenario unfolds if that floor gives way. A break below 654 could send with stock falling toward the next support level, which is down around 629.
So, after all of that, what's the bottom line? What does this all actually mean for you? Let's distill everything we've talked about down to the one final critical takeaway. Look, if you remember anything from this breakdown, it should be these two price zones. The entire battle is being fought between the floor at 654 and the ceiling at 709. The outcome of this fight will likely dictate the stock's next major move. These are the numbers to watch.
So, there you have it. The clues are on the table. We've got a long-term uptrend fighting against short-term weakness. The battle lines are clearly drawn between that floor of support and that ceiling of resistance. The only question left is, which way will this story turn?